The world is looking very differently at things now, and you'll have to look at things very, very differently because we are looking at what could be called as a very different kind of an regime. Last 4 years versus next 4 years for US policy making will change, and if the policy making in US or by United States will change, surely, gradually, but it will have an impact on how you would assess the world. So let's look at what are we staring at and what are we working with. Well, we are working with a good handover from Wall Street. It is not such a charged up for Asian markets, but you can argue back and say that Asian markets already reacted to a Trump victory yesterday, because by 10 o'clock India time, 10:30 India time, we pretty much knew that which way the election verdict was moving. So you can argue back and say that don't go by Asia, but look at US as the true indicator. So let's stay with US. What happened? Why have US markets gone up? When 2016 Trump came to power, US markets went down.
Yeah.
2024 comes back to power, US markets are celebrating. Why?
Yeah.
That is, I think, the most important question. And I think it's largely because of 2 or 3 factors. One, there is a very strong vote for Republicans. So it's not event risk. Whatever policy making and decision making would be done, right or wrong, is debatable, but that would be done with ease looking at the American political system, where the Republicans now have the control of the White House, the Senate, and the House. One. That means decision making will be will speed up. Second, no uptick in corporate tax. That is the commitment by Donald Trump, and that is something which markets are happy about, because when Republicans came, they cut corporate taxes, and then US went into a bull market. So yes, more tariff, but no corporate tax, and that is what is exciting Wall Street, because you have to pay less taxes. Where you pay less taxes, obviously companies will make more money. If companies will make more money, stock markets will go higher. There's nothing complicated in it. And the third part is more tariff, which is what we'll debate. The long-term implications of more tariff, who will gain? Will China's loss be India's gain, or India in a sense will be slapped on tariffs? What happens there? So it's very difficult to ascertain that what could be the tariff impact, but yeah, more tariffs are coming, more made in America narrative will be there, more push for American companies will be there, and in the near term that explains why the dollar has rallied and why Wall Street has rallied. So specifically, I think this is more like a endorsement by financial markets, and especially by US markets, that in the near term they expect the US economy to accelerate by the push, by the tariff, and by lower corporate tax. So it's a vote for let's say US stocks rather than anything else.
Yeah, absolutely. And here's how, some of the brokerages are reacting to a Trump victory this morning. Morgan Stanley is saying that tariffs, of course, are going to be in focus for Asia. There is that downside risk to China as well as the greater Asia region. They're saying tariffs might come as early as the first half of the calendar year 25 itself. 50 to 60% on China alone. That, of course, is the big question. Whether there are going to be more, tariff hikes coming in on countries other than China as well, that remains to be seen, because the universal 10% tariff on all imports is what the US currently has. Whether that figure is going to get updated or not. But anyway, what you've seen right now is overnight a higher US yield, stronger dollar, which perhaps may offset tariffs to some degree. And yes, US outperformance versus other emerging markets. Just want to quickly mark how, some of the indicators and some of the asset classes have actually transpired. You've got, since November 5th, a downtick of 5% coming in on crude, on copper, I beg your pardon, platinum, silver, gold, all of them have eased off somewhat. Natural gas has actually seen a spike of about 1.5%. It's been just pretty much net neutral, marginally soft for both Brent as well as, WTI crude. And yeah, Bitcoin, that's the one which has soared quite a fair bit. Almost an 8.5% uptick is what that asset class alone has seen. The US 10-year yield has moved up about almost 15 basis points. So that's been the kind of wild swings that you've seen across asset classes. But I think the question is going to be what holds in store for us.
Absolutely. And just going by the kind of movement that we witnessed yesterday, Aisha, we did see a sea of green for the equity markets. Incidentally, it was our best session in the last 1 month because do remember we've been talking about day after day of consolidation, tight range, but yesterday was anything but. It was a decisive move on the upside. So just to recap, it was a 1% gain on the frontline index at 24,484. You had the broader end of the market which saw a pretty stupendous rally, hitting a 2-week high for the SMID indices, 2% gain. You had the IT index that really soared. It's been the best session in the last 3 months. You also had the pharma stocks, which have been comfortably in the green. There was support coming in from all quarters, and all sectoral indices participated in yesterday's rally. So, Nikunj, 2 consecutive days that we have seen this up move, and more importantly, it's support coming in from the banks.
So, Aman, while it's a welcome rally, I would still say that it's not a rally which looks like could be durable in nature. I think India will underperform. We've been underperforming because of local factors, and I think now global factors are just going to add more fuel to the fact that why we should underperform. And I'll tell you why there is a case for FI selling to continue, and why you're unlikely to get a lot of global flows back. If you look at the combination of the strength in the dollar index and where interest rates are moving, there are 2 things which normally determine the flows. One, valuations, where India is not great. Second is where the currency is. The dollar will move from strength to strength because of the change of regime there and what markets would like to position. And C is the fact that yields have gone higher, and typically when yields are going higher and when currency is moving higher and when valuations are not attractive, emerging markets, they don't tend to get a lot of flows. The general assumption was that Fed will do multiple rate cuts, and those multiple rate cuts will have an impact on the dollar, and that in a sense again will have an impact on how the currency market would move, and then flows will come back to emerging markets. That whole thesis gets challenged. And in the near term, there is a serious case for emerging markets now to underperform global markets, and I think India will be no different. So while in Nifty terminology, let's look at it, you had a respectable close, 24,000 got defended, but US markets may be marching towards new high. I don't think Indian markets have the strength or the liquidity support or the momentum that we will go to a new all-time high. The best case scenario is that we maintain the recent lows and just stay in and around where we are. It's only time will tell that whether we are able to maintain those lows, but I'm not very excited about the market setup in India just because Wall Street is celebrating a Trump victory. That may not translate into a lot of green on the screen for us.
Yeah, and a large part of it seems to have played out just yesterday itself. But just analyzing what the businesses are going to be like and how the Indian economy is going to be, closely linked with Trump at the helm now. Nomura is saying that India does stand to be the biggest beneficiary. And then, of course, comes, economies or countries like Malaysia, Japan, Indonesia, Singapore, Thailand, etc. Also, if you talk about Indian companies, they do have extremely high exposure in the US as well, largely IT, but other than IT as well. There is, of course, emphasis, there's persistent systems, wherein a large 70 to 80 odd % of their sales, has exposure to the US region, LTI Mindtree, of course. But there is also, Nikunj, a Newland Pharma, there is a Dr. Reddy's as well, there's Natco Pharma, and of course Syngene too. So largely tech and pharma is which stands to be most sensitive, I guess.
See, let's look at data, and this is pure data, and I'm using the Citi report here. India's export to US under the Biden administration, they've grown at 9%. India's imports from US, they've grown at about 4%, actually less than 4%, which means the trade gap between India and US is actually increasing, and it has gone higher largely because of the service exports what we have. The big picture is that tariffs will come, and tariffs will come for everybody. But will tariffs be higher for China than India? I think the answer to that is a well yes. If that is the case, then on the margin, India would benefit. I doubt that any changes would happen to the IT services sector because, while there could be some tinkering in H1B visa and, that whole trend will continue, but that's not going to be a death knell for Indian IT companies because, whether it's Republicans or Democrats, we've seen this whole IT services debate which just comes and goes, but, ultimately US economy needs IT contracts to be outsourced. I don't think a change will happen. Yes, you will keep on hearing periodical noises on H1B visa, which is what happens every time. Democrats have done that, Republicans have done that, Trump did that, Biden did that, and again Trump will do that. So I don't think anything changes there. The challenge is that what happens to the sectors where suddenly the export has started coming up. Some cars, clean energy, green energy, pharmaceuticals, the bulk drugs, and then also chemicals. These are the categories where you need to really understand that, how the tariff move would move. But on the margin, tariffs are coming. I think India would benefit. Low cost manufacturing, which up until now was dominated by China, I sincerely feel that a lot of that low cost manufacturing will start moving to India. See, just by putting tariff does not mean that you can start an industry. No, by putting tariff, what can you do? You can say, okay, I will make the cost of landing higher. But if your cost of landing is still lower than what your cost of manufacturing in the local country is, then you can put as much tariffs as you want, doesn't matter. You ultimately will have to, you still have to punch. In that case, I think that more tariffs are coming for China, which actually could benefit some specific companies where India may just gain because of tariff. You have to understand that which way trends are moving. The trend is that India and US are in a very strong relationship, which is very mutual, respectable and very mutual. That is not true when it comes to US and China relationships right now. So I think on the margin, tariffs are coming, but mild for India, more for China.